Welcome to Pathlight Insights. Our topic today is actually the rising price of gasoline. Now, if you do drive, you might feel that your wallet's a little bit lighter these days. And that's because the national average price for a gallon of gasoline has risen to $3.72 as of Monday, February 27th. And that's up 10% year over year. And the actual price of a barrel of oil is up another 8% this year to around $106 a barrel. A lot of analysts out there actually are predicting that gasoline will rise to about $5 a gallon by Memorial Day, which is a price we haven't seen ever in this country. Now, there are a few reasons for the rise in prices. The first of which, growing demand, is actually a positive. It actually means that the global economy is still recovering from the global recession that we experienced in 2008. The second, and probably more likely culprit at this point in time, is the rising tension between the West and Iran over the Iranian nuclear program. Now, there have always been saber rattling by Iran when it comes to their nuclear program, but this is actually the first time that the West has decided to boycott and is actually executing a boycott of Iranian oil. So it's actually been taken up a few notches. Now, rising gasoline prices present a large threat to the global economy as they subtract from discretionary income, which means consumers have less money to spend after they've paid for their necessities. Now, it's estimated that every $10 rise in the price of oil subtracts about 0.2% from the global economy. So in the U.S., that $10 costs us roughly $28 billion a year in GDP. Now, we are in a slower growth period for the U.S. economy at this point. Fourth quarter GDP came in at roughly 3%. So that 0.2% we do feel that 0.2%. It'd be different if we were China growing at 9% plus, but at 3%, it hurts. But we saw in 2011 the same types of fears with the rising price of oil and gasoline, the fear that the U.S. would be tilted into a double-dip recession. Now, at Pathlight, we didn't think that rising price of gas and oil would cause that double-dip recession. We actually wrote about it in a piece called The Threat of Rising Oil Prices, which you can view on our website at www.pathlightinvestors.com. And we don't think 2012 is any different than 2011. Our optimism stems from the steady increase in employment in this country. In 2011, we created 1.6 million jobs. And if you take the national average salary of roughly $42,000, that's about $67 billion of new spend coming online. And that really doesn't even take into account any of the multiplier effect that we would see. Now, the momentum has actually increased in 2012. We actually saw 243,000 jobs created in the month of January. So we're on an upward move. So while we don't like to see elevated gas prices, and we might have to deal with this nuisance for a while longer, we don't believe it's going to bring on a new recession. Thanks for watching.